Hello, Chart Watchers, and welcome to this Monday, May 7th Market Watchers live show with your hosts, Tom Boley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we've gotten off to another good start. You can see from the Dow Jones Industrial Average, we had a nice reversal, really nice reversal last Thursday. Followed it up with strong action on Friday, and here we go into a new trading week, currently trading near the highest level we've seen over the past couple of weeks, with the Dow Jones Industrial Average up 180 points near the 24,500 level. The S&P 500 is up more than 15 points today, also trying to break above some recent price resistance. The NASDAQ really strong. A break above 7,300 would be very significant technically. We're currently at 72.81, up 72 points, roughly 1%. Russell 2000 outperforming again on a regular basis, and like the NASDAQ, trying to make a pretty significant breakout, trying to clear the April high. 10-year Treasury yield bouncing. Last week, we did see it get back down to about 2.91%. Currently, it is closer to 2.96% as it establishes a new trading range. Volatility index currently below 15. I think this is significant because each time the market has moved down and threatened those recent lows, for instance, 2581 on the S&P 500, we continue to see that volatility index get lower and lower, and a low reading on volatility normally coincides with bull market advances. Energy leading the day so far. With crude oil prices are back above $70 a barrel for the first time since November 2014. Energy doing very well. Technology also, and this is important, breaking above that high from April, so technically looking very strong. Industrials have been the weak link, but they are also having a strong day today, while consumer staples continues to struggle on a relative basis, actually down today. ExxonMobil is the main reason we're seeing the XLE breaking out today. Exxon is about 23% of that ETF. Even though Exxon's been struggling, the ETF has been holding up pretty well because we have had a strong energy group. But ExxonMobil rallying today. On the other end of the spectrum in the Dow Jones, the weakest stock is Walmart, getting close to a key support level. But I'll talk about Walmart a little bit more in just a few minutes. But first, let me bring in my co-host, Aaron. How was your weekend, Aaron?
I had a very nice weekend. It was a little bit warm here in Southern California. Had the 90s going, but made for a really nice Cinco de Mayo barbecue with our neighbors.
Cool. Yeah, I actually went out to the Wells Fargo Championship yesterday. So I was rubbing elbows, almost literally, rubbing elbows with Tiger Woods and Rory McIlroy and
Wow.
Fowler, Phil Mickelson, Justin Thomas, all those guys. I was at the back of the first green, and I almost could have taken one step and been on the fringe. I mean, they had the ropes really close to the green.
Nice.
And I told the crowd, people around me, that I was going to take one for the team if I had to, if ball came down there, because I was going to get a ball signed. So I figure
there you go.
I didn't want to take it off an ankle bone or off the top of the head or something, but
I can just see you jumping into the air to have that ball hit you as so you can.
I coach youth soccer, so I was thinking about maybe trying. If it was Tiger Woods, I might have tried to head it back toward the hole or something, but no, not really. Just
no.
That wouldn't have worked out too well. But it was fun. It was a beautiful day here in Charlotte. It was probably about 80, 82 degrees. Just an awesome day to be out there watching those guys play. And of course, I love golf, so we don't get an opportunity too often to see the best in the world play. So it was really fun. But that first hole, and I know you're not really big into golf, but we might have some golfers out there. The first hole, I must have watched, I'm going to say probably 12 groups come through.
Wow.
So that's 24 golfers. And I think I may have seen 3 pars. It's a really long.
Wow.
Talking to somebody who actually played the course. Normally it's a par 4 for members, par 5 for members, but they made it a par 4 for the pros. And it was into the wind. It was probably with the pin all the way back. I mean, it was probably 515 yards, which is an unusually long par 4 even for the pros. And into the wind with the pin back and the green. I didn't see anybody make a putt over about 8 or 10 feet on that green. I mean, it was just everything about the hole was really difficult. So watching the pros not being able to make par on a par 4, I can only imagine if I was trying to play that hole. But anyway, it was a blast. We had a good time.
Excellent. Well, I can't hear you too well. If you could turn up your mic just a little or maybe closer.
Okay.
There we go. I know our producer was asking about it. All right, with that, I guess I'll go ahead and get into the weekly schedule and today's agenda. So this week, Tom, you have a workshop tomorrow. Do you know what you're going to be doing it on?
Oh, wow. Maybe I'm gonna at some point today I'll have to come up with something to let everyone know. I thought about
Totally forgot.
well, I didn't forget. I knew I had it coming up, but there were a few different questions in the survey, or a few different comments in the survey. I was going to pick one of them. Let me go back maybe during one of the segments today. Maybe when you're doing decision point update at the end, I'll go back and take a look at those comments and pick one, and I'll announce it at the end of the show. How's that?
Awesome. And then we have from Raymond James, Jeffrey Sout will be here, and that'll be a great one. I'm very much looking forward to CMT Jeffrey Sout. And following that on Thursday, we have Dan Russo here from Chaikin Analytics. That should be very interesting. I know when we had Mark Chaikin on, it was a great presentation. And then we will have everything stock charts on Friday. So a full and packed week coming up for you on Market Watchers Live. But today, we'll be starting with our Monday setups after the technical news, followed by an earnings spotlight. John Hopkins is in the house to do that. And then for our 10 and 10 to 1, our first symbol is going to be Adobe Systems, ADBE. And we're going to finish up with the decision point review. I will be giving you the rundown on what happened last week and what we should expect this week. And with that, I'm going to turn it back to you, Tom, for some technical news and headlines.
Okay, sounds good. Really interesting day. Of course, every day to me is an interesting day in the stock market, but there's no economic news out. So the 10-year Treasury yield, the bond market, essentially just kind of trading off the technicals. Do have a couple of Fed speakers this afternoon. I think only one voting member, the Richmond Fed President Thomas Barkin, will be speaking later this afternoon. I think at 2 o'clock Eastern at George Mason University. And then two non-voting members, I think, speak around 3 o'clock. So not really a whole lot going on. We did see the 10-year Treasury yield pull back and hit 20-day moving average. Currently, that is down at 2.92%, and we bounced off of it. I was thinking maybe we would, be range bound here for a little bit between 2.90% and 305. And 305 is that big level from back at the beginning of 2014, I think. So it's been about 4 years, I think, since we've had the 10-year Treasury yield over 305. And what I did mention earlier, though, is the crude oil price. I looked just a little bit ago. It was a little over $70 a barrel. It was at 70.52 about 15 minutes ago. And you can see we had a little breakout on Friday above this consolidation, breaking to a close above $69 a barrel. Today, it is above $70 a barrel. And if we take a look at the long term of this, let's see, pull up 15-year monthly chart. And you can see once it broke above this 60 area, I'm not surprised by this move to the upside. We should start to see some overhead resistance. I'm going to say in the 70s. I think breaking above 80 is going to be really difficult, but I would not be surprised to see the crude oil price remain in the 70 to 80 range for a while, or at least top in that area. Moving back down, even on a weekly basis, I think moving back down to that rising 20-week moving average wouldn't be out of the question, although I'd be surprised if it went down there quickly. I think that global economic conditions are driving prices to the upside. And I've shown before there is a pretty tight positive correlation between the direction of crude oil prices and the direction of global equity markets, including the benchmark S&P 500 here in the U.S. So, and the reason for it, I think, is quite simple, that a lot of times crude oil prices go up because of increasing demand. I mean, it is a demand supply issue. And if you've got economic conditions picking up globally, crude oil prices are going to go up based on that increased demand. The S&P 500, when global economic conditions are improving, we tend to see higher profits on the S&P 500 companies, and as a result, higher prices. So a lot of times this is a good leading indicator for the stock market when you've got crude oil prices moving up the way they are right now. So I still maintain my bullish forecast on the stock market, albeit we are in this consolidation range right now and very frustrating trading back and forth in the range. Now, as I look at the market, and I put this in my blog this morning, I think if you look at the S&P 500, let's see if I can get this chart. There we go. If you look at the S&P 500, I'm going to annotate this because I think we're squeezing into a pretty tight triangle now. And so if we take these tops here coming across, you can see that the trend line comes in just at about 2,700, maybe a tad beneath it. And then I'm also going to draw in from the gap that we had here. This, I think, was at 2712, and we gapped down. We came all the way back up, filled that gap, turned back down, tested price support again, and I'm going to draw that line right in here at 2581. So here is a major support level. I think we've got to continue to keep an eye on 2581 to the downside on the S&P. I think that would be, to me, the most important thing is price and volume, that combination. So it doesn't matter what my other indicators are saying, no matter what rotation's doing, blah, blah, blah. If you start to have major price breakdowns, you have to respect it. So I think 2581 on a closing basis on the S&P 500 is very important. I think if we lose that level, it does set up for perhaps more weakness over the summer months. So I'd keep that level in mind to the downside. In the meantime, to the upside, you've got the trend line that comes in just a little bit below 2,700 and this gap resistance at about 2712. I think if we get through both those levels, that would be very bullish. And as I showed you earlier, this mid-April high, we're starting to see some of the areas like technology breaking above it. So it's only a matter of time if you start getting sectors moving above that level before the overall benchmark makes it. Part of the problem with the S&P too is that we've had a strong dollar, and we've talked about this a lot recently, but the Russell 2000 has been outperforming the S&P because of the strong dollar. Let me go ahead and close this for a second. So let's watch that 2712 level. Now, you might look at these moving averages and say, well, we went right through the 20-day. Now we're testing the 50. Wouldn't that be a good sign if we get through? I would say ordinarily that those moving averages, when you're trending, are very important. When you are not trending and you are consolidating like this, look at all these failed moves above and below the two moving averages. So honestly, I'm not even really that concerned about moving averages right now. We need to establish a trend before we worry about trend following indicators like moving averages. So I think we need to break above the key price levels. For the S&P, it's 2712. To the upside, to the downside, 2581. I think those are the two biggest levels for me watching the S&P right now. I think a break above 2712 could signal a resumption of the bull market, in my view. UUP, let's talk about that dollar for a second because we continue to move higher. The dollar, this is the proxy for the U.S. dollar index. That's the U.S. dollar index bullish fund. And earlier today, we did hit a high of 24.42. That took out the highs from last week. We continue to surge on the dollar. I think we're going to continue to surge higher on the dollar. And that to me means you want to continue to focus or maybe weight a little more heavily the Russell 2000. I like to pull up this ratio so that you can see how it is performing relative to the benchmark S&P 500. And when we pull this up, you will see that we are breaking to another high today. Russell 2000 on a relative basis, breaking to a new high versus the S&P 500. This started back with the double bottom in February and March. And if we go back and look at that dollar again, you're going to see actually February, middle of February is when we printed the bottom. Late March, we got close to putting in another bottom to test the January, February bottoms on the dollar, but then started to move higher. This is something that I know Aaron and I have both talked about quite a bit on the show. We've been anticipating dollar strength. We're getting it now. And one of the things that you get with a rising dollar is money moving away from those multinational companies on the S&P 500 and into more domestic companies that whose earnings aren't negatively impacted by a rising dollar. So with that, I know we have a number of upgrades, not really any downgrades, but I'm going to let Aaron take over and go through the upgrades with you for today.
All righty, let's take a peek. Yes, as you said, 5 of them. Let's get there. Oh, you don't want to see that yet. There we go. Here are the upgrades that I'm going to look at today. There are 5 of them. I thought 1 or 2 of the charts looked interesting, so I'll concentrate on those a little bit more than the others. AutoZone was one that came in with an upgrade, and you can see that we've got that 5-day EMA is on a rise with the nice move. But I'm looking at this overhead resistance coming up at about, what does it look like, 665 maybe. That would be, I would like to see it get above that level before I would kind of be convinced that what we're seeing here is the kind of move I'd want to get into. And of course, we've already been through quite a bit of rally. But the PMO looks good. Notice that the OBV is trending higher with this rally. And of course, the scooters made quite the improvement. So I'd still like to see it get above that 200-day EMA. I noticed with a couple of these upgrades, the 200-day EMA is causing some problems, but I'll point that out shortly. Really nice breakout here on CVR refining. We were talking about energy and oil doing a bit better right now. I suspect that might have something to do with this. We can see the PMO is starting to accelerate higher on this gap up. You know, I think this one was worth a weekly chart peek. There we go. So that breakout's pretty significant, but I can see this area about 1950 that could pose a problem here as far as overhead resistance. And of course, we've already made this big 7% move upward. So yeah, not that interesting to me. Here's another one that's been struggling dear with that 200-day EMA. Really need to see it break out from there. We also have a declining tops line, trend line that could pose some sort of resistance as well. But you can see, I mean, the PMO has turned up. This one did not show up on my scan today, I think just because the EMAs aren't configured the way I like to see them for a Monday setup. But I think if you get that breakout above that 200-day EMA, you have some pretty good upside potential here, right around 150, 250, somewhere in there. So I thought that one was somewhat interesting. But again, we've got to worry about that 200-day EMA as overhead resistance. This one, Alumina, looks really nice. I mean, we had big gap up today. We're up almost 5%, but we have a really nice breakout here. Currently, the last price is holding above that area that used to be resistance, but could end up turning into some support. Look at rising bottoms on the PMO, I think is encouraging. We got the buy signal. The scooter is moving on its way up. It's tough though, again, when we get these upgrades, you get these big moves to the upside. I think a lot of times you want to put that on the watch list, but with a breakout like that, I might make a consideration for getting in before it backs all the way back down. For McDonald's, we've been talking a lot about McDonald's between the 10 and 10, I think, and just news that has been coming through. And you can see another great move up here. We had that big rally earlier, and then it pulled way back off of that. And now we're starting to pick right back up to get where it was at about that, what is it, 168 level, which could pose some resistance. But I like the setup here. The PMO is moving up nicely. It's now in positive territory. We're starting to see a little bit of margin put in between the PMO and its signal lines. So I thought that looked pretty good. And that was it. That's all 5. So, you know, did you have any comments on those? I mean, does some of them look better or worse to you, Tom?
Well, I definitely like the ILMN. I mean, I like that breakout over that double top that you had up there. Maybe not quite a double top. I think we had a little slightly higher highs, but I think that move right there. First of all, we got a nice uptrend in play. And I do like the breakout, assuming it holds. I don't like to chase, but I think if it holds on the breakout and we get a little consolidation, I think that definitely could be a play down the road. And the other one I think McDonald's has really kind of changed its the structure of its chart with that gap up that we saw a week ago. We went all the way back down, almost filled the gap, and now started to bounce back up to the upside. A break above 168, I think, would be really bullish for McDonald's.
Yeah, absolutely. I thought that one looked pretty good. All right. And with that, I guess we'll go ahead and move into Monday setups. I worked on my DecisionPoint report first, so I do have a pretty good set to look at. But let's go ahead and look at what happened last week. Tom and I would both like to forget about last week. I had Immunogen, and I got in at 1090 for our Monday setup. I didn't actually buy, just to be clear. But for the Monday setup, it was at 1090. I think I looked at it earlier today. It's down like 3.5% since last Monday. Tom, you had Nectar, and I know that one was down a little over 5% this morning as well. So not the best place, but you know, I think with both of them, if you look at them, I'm going to actually bring it up. All righty, so let's go over here. So if you look at Immunogen, whoops, we're in the edit. I don't want to be there. Excuse me. There we go. So if we'd cut the thing off on Wednesday, we would have both, I think, done pretty well. So I did not hit the stop. I had it set pretty low here. I think it still looks pretty good. We're now getting into the support area. This might actually be a better entry point at this point. I probably could have used this as a Monday setup again. I think the chart still looks fairly good, but I wouldn't, for a Monday setup, I wouldn't do that to you guys. I would not pick a PMO that is topping and ready for a sell signal. I suspect it's a fake out, but I wouldn't want to take that chance nor put that up as a Monday setup. And then let's look at yours, Nectar.
Do we have to?
I know. Well, you're doing pretty good with the consolidation. It was trending slightly upward. Both of us just got hammered on Friday, and now today it looks like we might be making it up. I mean, you're looking at this one right now up 3.5% from Friday's close. So these might look better this week than they did last week. They looked good, but maybe this week is going to be better for them.
I thought Nectar probably would hold in that 80, low 80 range. I really just liked that it had so much potential upside.
Yes.
If biotechs were to turn. What was really interesting last week is that when the biotechs actually started to perform pretty well, I thought IMGN and NKTR both struggled. And when the biotechs had poor days, that's when our stocks tended to do better. I didn't quite get all that, but the way the market works sometimes. But yeah, really both stocks and even ILMN that we just talked about a little bit ago, that's in the biotech space as well. I mean, they're all going to do better if the biotechs start to outperform the S&P 500. And unfortunately, they have been downtrending throughout most of 2018.
Yes, indeed. All right, so let me get to my Monday setups. Like I said, I haven't actually gotten them completely merged the way I usually do, but I do have them sitting in my scan area. So let's go ahead and I'll just show you the list right now. Right now, what we're looking at for me, what was interesting, and I'll just preface this, was that when I originally ran my scan, I decided to do add ETFs as a possibility, as far as the group that I was scanning. And I thought it was very interesting. It came up with, I think there were about 11, and 5 of them were ETFs based on bonds. And I'm looking at TLT. I'm going to do my report at the end of the program, but I just can't feel bullish about bonds. So I just kind of scrapped that because I wouldn't jump into that. But I thought I'd notify our viewers that at this point, the PMO is suggesting we're going to have something good as far as these ETFs, the bond ETFs. But again, I'm not going to put those out there as Monday setups because I'm not bullish enough on bonds right now to, throw some of those out at you. So these were the ones that I was going to look at. We'll look at Pegasystems last because I believe that was my choice. I'm just going to check real quick. Yep, that was my choice. So we'll go ahead and start with Axogen, AXGN. And I like this one. Obviously, you're going to see really nice PMO setups here because that's what my scan is doing for me. Also, we'll see a decent scooter. Usually, I think this scan went above 75. So all of them have strong scooters that we're going to look at. The other thing I noticed, and I didn't annotate it on here, is a lot of ascending triangles. And those are bullish formations. We've got the breakout right now in Axogen from that ascending triangle formation. So I would be looking for a move. If you go to the back end, actually, let me go ahead and annotate this because I don't want to confuse people. Yeah, and for whatever reason, when we go into the annotate, it gets blurry. All right, so here is that ascending part of the triangle. So there's your triangle, right? So we got that breakout. If you want to go with measurements, I mean, I've read various ways to do that, but just for fun here, the height of the ascending triangle is what you look for to set up your target. So that's about a 5-6 point move. So I would be looking at, I think I was looking at about 40 47 somewhere in there as a upside target. So I mean, I think this one has some great potential, but I didn't pick it. We'll save those changes. New relic I thought was interesting. Well, all of these I thought were interesting. We've got a nice rounded bottom. You know, we're finally up above that 20-day EMA, broke through it pretty handily. There's still just, you know, we still have overhead resistance to get over here, but we're already halfway through that channel. So even if it was to, you know, hit the top of this channel, we're already halfway in it. So that's why I really wouldn't have picked this as a Monday setup. But look at this really nice PMO, just scooping up very nicely, very beautifully. We don't usually get too many noisy signals on this particular stock. So these PMO buy signals tend to be pretty accurate on New Relic. So I thought that one was interesting to look at. If you see this maybe on a watch list and you see it pull back closer to that 72.50, I think that would be a very interesting entry point. XPO Logistics, nice breakout from a declining top trend line there. See scoop on that PMO heading higher. Upside potential, again, this was one I think I didn't really feel like we'd already made a lot of this rally move. And as far as a Monday setup goes, I'm looking at a very short-term time frame, right? We're looking at about 1 week. So my analysis changes somewhat from when months, 3 months, any of those sort of time frames, I'm going to look at my chart a little bit differently. Right now, I'm looking at really short-term setups. And so right now, I see upside potential here at about 110. We've been sitting at, you know, support right around that 95. So I feel like we've already made a lot of that move. But again, might sit it on a watch list. If we get a little bit of a pullback, maybe to that 20 or 50. Could be an interesting play. But I'm just looking at that as possible overhead resistance too, just above 105. So we'll have to see if it'll fail there or not. But here is my pick. Pegasystems. I thought, what a great name. I think that's so adorable. All right, so we got the breakout and you can see we're pulling back. Now I have to say, Tom, now that I'm looking at this, we might end up with a shooting star off of a rally, which isn't the best thing to see as far as a candle goes, but I don't follow those that closely. Again, I see another ascending triangle. I'm seeing that breakout above. And like I said, I did see that pullback from the high earlier today. So it might be a really good opportunity for an entry. Especially now, I was looking at it about, well, 10 minutes ago, it was at 64.30. It was 64.20 earlier today, but for the sake of the Monday setups, I get to have it at the last price. So I'm going to put it in at 64.10 for Pegasystems. And again, look at the OBV is rising nicely. We've got the scooter coming back into the hot zone, which is always something good to see. The weekly chart, I think I took a peek at. There we go. And you can see right now it's really struggling there. It's all-time highs. So if we can get above that overhead resistance, which we've already attempted to do and get past, so you can see we've hit all-time highs today when you look at the intraday high. So I think this one, I like Pegasystems. That is what I'm going to go with at 64.10.
All right, sounds good. All right, well, here was the one I included in my blog this morning. Teladoc, TDOC, came out with good earnings. You can see actually moved up. And by the way, it came out with negative earnings. I think it was 39 cents, but the market was expecting 43-cent loss. So it actually beat earnings expectations, beat on the revenue on the top line. And you can see after the earnings report, got up to 47 from being down around 42 and change prior. So that was a pretty good sized move with its earnings report and on heavy volume. But you can see the next day came all the way back down, a little bit of a head fake in my opinion. And by the time the low hit on Friday, we're all the way back down to 40 from 47. But I think that was an opportunity. And on big volume, again, we had a nice reversal and moving back up again. So it is a volatile stock, clearly has been very volatile. But I actually thought this one could make a move. I wouldn't be surprised maybe If you keep a stop in around $40, I'd be looking maybe for a move up to about the 48 level. And the way I measured that is off of this high right here. I look at this, the left shoulder, neckline, ahead, right side of the neckline, right shoulder, and then with earnings, we had a breakout. So I think that trend line, if you measure across there, down from about 43 or 43 and a half down to about 38 and a half, that'll give you maybe $5. So on the breakout at 43, that would be roughly $48, maybe 48 and a half on the measurement. We got almost 47 that day, pulled back, but I think we're going to make another run back to the upside. So I really like Teladoc. I'm not going to go with it though, just because again, we're talking about a 5-day window here that we use in this little competition, friendly competition.
Mm-hmm.
And stock's up 2.37% today. So I'm trying to find something that isn't up so much. So I like Teladoc. I wanted to talk about it first because it was in my blog. I still think this one goes higher, but I would be more interested if I got a pullback maybe of $1 or so, maybe $1.50. I think the reward to risk would set up a lot better at that point. I'm going to go with McDonald's. And we've talked about it a lot. Just said we talked about it a lot. But I think McDonald's, with its earnings report, had the huge gap up. I would have liked to have seen it when I wish this had been today, because then we've been all the way back almost to that gap support. We did make a big move on Friday, but after gapping up earlier today, we've pulled back. So we got up to 167 and change. Now we're back to 165. I just feel a little bit better with this one. I know we go from where we are today. So McDonald's is 165.13, but I actually really like the trade on a test of the 20-day moving average. If we would pull back a little bit more, that's where I would really look to get in from a reward to risk standpoint. But I do think we're going to go back up and take out this 168. I think 164 was important. We had a lot of reaction highs up at about 164 coming off of this selling. We couldn't get through, and with earnings, we were able to negotiate it. And again, like I said, went back, almost got to gap support, and now we're turning back around. You can see that the PPO is very strengthening, looks really good here. Volume trends, I think, look good. So I think we're going to get that breakout above 168. So I like McDonald's. The one downside, of course, is McDonald's is a multinational company, and it could be hurt somewhat on a relative basis by the rising dollar. But for a week, I'm going to go ahead and go with McDonald's. A couple others that caught my interest, UIS. This is Unisys. The reason I didn't go with this one is just because of the group itself. So, but let me pull it up first here. You can see the huge move up back in February, very heavy volume, lots of consolidation, a little bit of a inverse head and shoulder here as well, pulling back, putting in the left side of the neckline, head, right side of the neckline, pull back, and then breakout. Look at the volume coming in. That would actually measure from about 1150 down to 975, $1.75. Add that to 1150, and you get 13 and a quarter. So it's still got a measurement of another 10% from where it is right now. The reason I didn't go with this one, though, is I just didn't like the overall group. So it's kind of swimming against the current. You can see UIS making a breakout, which is awesome, but its group, I think this is computer services, struggling, moving lower here. And then, again, looking at its peers, relative to its peers, Unisys is doing great, doing not bad, broke out against the S&P, but look at its group relative to the S&P. Last 3 weeks has been brutal. So, Unisys is hanging in there, but its group is not. And so that was the reason that I didn't go with that. If this had been a stronger group, Unisys probably would have been my pick this week. A couple of others, maybe just a quick look at Juniper. I think Juniper looks great after a huge gap up with earnings. Look at this. This is market maker manipulation as far as I'm concerned. Huge pullback, tested gap support. So all those who jumped in at the open probably were not feeling very good by the end of that day. Probably a lot of them selling. And now we have filled the gap, and look at Juniper turning back up again. A break above 27, I think, would be very bullish for Juniper down the road. And I'm looking for it to go up and test that level at a minimum. Johnson Controls also, I think, really making a nice move here off of this downtrend. Notice at the most recent bottom here, reversing candle. That's a piercing candle. And at the bottom, lower close, higher PPO. So you got a positive divergence and a reversing candle. That's normally a great sign. We not only went up to the 50, but we got to the 50, pulled back, hit the rising 20, and broke out again. And I think that's a really good pattern. So I expect JCI to be higher. And the last one I have is the ENPH. This is in renewable energy. This one I like. I just think that it can be extremely volatile. and I'm going to pull up a 10-minute 5-day chart. I mean, you can see that just going from 430, you've got gap support down at 430, and it's been in a 430 to 455 range here just in the last 2 or 3 days. And that's, about 5% of the stock price, something like that. That's pretty big moves back and forth. So I like this one, but I'd really like it if it got back down closer to 430. With it sitting at 447, I just didn't like the reward to risk. It'd be down maybe 3 or 4% before it ever got to support. So anyhow, those were some of the stocks I thought looked pretty interesting. All of these companies, by the way, are on my strong earnings chart list. They've all beaten top and bottom line estimates in their most recent quarter, and I think they look pretty good technically. So that's why I have included them. And now we have our Monday setup summary here. You can see Aaron has gone with Pegasus, PEGA at 64.10. I have gone with McDonald's at 165.13. And there you can see the other stocks that we discussed. And with that, I guess it's time to bring in Mr. Hopkins. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trades. This strategy resulted in a 2017 risk-adjusted return that outperformed benchmark S&P 500 fivefold. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing and better trades. Mr. Hopkins, how you doing this weekend, or how did you do this past weekend?
I'm doing pretty good. How about yourself?
I'm doing good. I know you're a Washington area sports fan because for those of you that don't know, John and I both are from the Washington, D.C. area. I guess John originally was from Michigan, but
yes,
we did a lot of work together in the D.C. area. And so you and I have suffered through a lot of sports in Washington, D.C. And, of course, the Capitals are now one game away from clinching to the conference finals. And I saw a stat on ESPN, and I'm like, okay, that's why I'm so frustrated. They should that between the Washington Capitals, the Washington Nationals, the Washington Redskins, and the Washington Wizards, those 4 teams have been within one win of a conference championship game 13 times since 1998. Do you know what their record is?
Oh, sure.
Yeah, 0-13.
I figured that. That was like a no-brainer. And by the way, we won't spend a lot of time on this, but of course, Pittsburgh is their nemesis. Okay, the Penguins.
Yes.
Every time they get close, Pittsburgh, they just seem to come up big but I think this is it, Tom. I've been watching very carefully. They seem more determined this year. I don't know how to explain it, but I think they're going to close it out.
Well, I will say, one of my biggest problems, and we'll get into the earnings here in just a minute, but one of my biggest problems with the Capitals over the years has been with Ovi, Alex Ovechkin. He's no doubt he'll go down as one of the best players in hockey history. He's got all the numbers to prove it, the stats. But for some reason, in the playoffs, and he's had a lot of goals, but for some reason, he never seems to come up big in the biggest. And when he made that goal with a minute left in Pittsburgh, the other day, I agree with you. I mean, it was just all of a sudden, it's like, wow, he made a big goal.
Absolutely.
That was a huge goal for the Caps to win that game.
Huge. Yes, it was.
Yeah. So anyhow, that kept us from going 3-1 or whatever it was, or actually, that might have been the one that put us up 2-1. I'm not sure.
That's right. Yeah.
Anyhow, so we got Game 6 tonight, and we'll see what happens with that.
All right.
But so what do you got for us? I know. I've been watching a lot of these companies, and I don't know what you think about it, but I'm going to just throw you some charts up here. I mean, here's Microsoft's chart. Microsoft right here came out with earnings. It gaps up, pulls back.
Yep.
Let me pull up Caterpillar for you. Caterpillar, here's their earnings gap up, and that's more than just a pullback. That's a massive reversal. How about Boeing? Here's Boeing's earnings right after earnings, and then you can see what happened there. Intel. Intel came out with a really nice earnings report, gaps up, looks great, and then pulls back. What are you making of this earnings season?
Well, and those are the really strong ones.
Yeah.
They had really strong earnings, and it's been really difficult for a lot of stocks, to hold their gains. And what's really interesting is, of course, our name is earningsbeats.com. And so we look for companies that beat earnings, pulled back, and then could be nice trading candidates. For the first time in quite a while, matter of fact, I think one time in our history, for a very brief period of time, did we add a category to our repertoire, and that's earnings misses. Okay. Mm-hmm. So in other words, Tom, what we've been bullish on the market for a long time, which has been the right direction. And our tendency is, if we run into a soft patch, our tendency is to just move to the sidelines, mm-hmm. and not try really to do much shorting, because shorting in a bull market can be an exercise in futility. However, for the first time in quite a while, we've identified a number of stocks that we think could be short candidates, because Tom, this market, it's unbelievable. If you don't believe in technical analysis, just pull the S&P up, that 200-day moving average, right? I mean, how many times? I think 10 times or so it's held. And if you look at last week, you will see that the S&P basically held its 200-day to the penny. Yeah. It was at 215. Excuse me. It was at last week. It was at 26.15 and change. Mm-hmm. And look where it got. Okay, and now look where it is. Yep. It's pulled right up to the 50-day. Yep. So to me, that's our range right now. And if it can clear that 50-day, then you can see back in mid-April, that little top there. I think we could go up a little bit higher. To be honest with you, from a shorting perspective, I'm going to kind of keep an eye on it and see if we make it through that 50-day. Mm-hmm. But even if we do, I think the closer we get to that little peak in mid-April, presents even a better opportunity potentially for shorting. I've got a couple of stocks here that I'd like to bring to your attention that I'm keeping an eye on, because usually I come on the show, Tom, and I talk about great earnings and gap ups, and then wait for stocks to pull back. I want to take a look at the flip side of that for just a minute. So I have a couple of stocks here.
Okay, what do you got?
One is KMX.
Okay, CarMax.
Yeah, I mean, take a look at CarMax is actually, it actually missed its earnings per share, and it's actually, made a nice move here, mm-hmm. To the upside.
Not a whole lot of.
What's that?
I said not a whole lot of volume on this move.
Not a whole lot of volume on the move, and I'm going to wait to see maybe if it goes just a little bit higher. I think it could be a good reward to risk to the downside if the market, continues to be stagnant here or even lower. Here's one, CP.
Yeah, I was just drawing in a couple lines.
Oh, yeah, yep.
I noticed in early February when we got the selling on CarMax, those bounces right
yeah.
there, about 66, couldn't get through. So
yeah, right up near 66 could be a potential short opportunity with a tight cover.
Yeah.
And I think it could work its way easily back down, to the 20-day. So you could pick up 3 or 4 points. And if you had a tight stop, especially.
All right. What else you got?
Let's take a look at CP.
Okay. Railroad.
Yeah. And here you can see, this stock made a move higher, a week or so ago, then at earnings, and down it comes. And now it's making a move higher. Not very much volume today. To me, if this thing goes just a little bit higher, I think the reward to risk is to the downside.
Yeah, I think. The railroads obviously are really important because they're only going to go up if the domestic economy is strengthening. So I think they can give us a really good signal. I agree with you. I think that they've been struggling for a while here, and it's just the flip side. I mean, if you're thinking about shorting, really the difference is that as you move up, you want to get close to a resistance level. That way, if you're wrong and it gets through the resistance level, you can keep your losses to a minimum.
Exactly. And here's another one. Hold on. Let me give you another one here. Let's take a look at, this is a good one. Genuine Parts, GPC.
Okay.
Now you can see this one, see that big bar I'm selling
Mhm.
on the earnings. Now it's trying to recover a little bit here, but I think if we can get back up near that 90, 150, 92
Mhm.
range, that to me would be a good place to consider shorting with a tight stop just in case it goes against you. But it could easily work its way, back down to that 87 range or so.
Mhm.
So I think it could be with a little bit of patience. It works the same way with shorts as it does longs. You see a stock, let's say it gaps down, and then makes a move higher. You got to be patient with these, just like you are with those candidates that are long,
Mhm.
and make a move higher. You got to wait for them to come back to you.
Yeah, and that last move here to the upside looks to me like off the gap down. I think this was the earnings, the gap lower, went back. Essentially, we filled that gap and then turned back down. I agree that that gap resistance and then maybe even that high right before earnings at 92 or 94 or whatever that is. I think that's the key zone, I would say, on genuine parts.
I'll give you one more here.
Okay.
Take a look at TSM. Okay.
Okay.
So you got TSM here. You can see, they reported their earnings and they came down sharply in big volume.
Mhm.
And, I think if this thing got anywhere, back near that 20-day moving average,
Mhm.
up around 39 and change or so,
Yep.
I think would be an excellent shorting candidate, with a tight stop there.
Mhm.
And it's really interesting, Tom, because if you take a look at TSM, how it gapped down on its
Yep.
earnings, again, I've come in here so many times and we've talked about companies gapped up, on big earnings, get away from the pullback. So we got just the opposite here.
Mhm.
And
And I just see, I mean, as it pulls back, you can see the RSI went down below 30. So it was very
yes,
oversold in the near term. It's just like, for me, I don't like to buy a stock with an RSI above 70, and I wouldn't want to short one with an RSI
no,
below 30.
yeah,
Like you said, you want things to kind of settle down, get back up, get closer to a level where you can minimize your risk in case you're wrong. And I agree with you. I think that gap resistance is, I like to trade gaps, and I like to, on a short trade, I would do just the opposite of what I do on a long trade. And that is, if you gap down and keep selling off, usually the bottom of the gap is the key level. There are some that'll be waiting for it to get all the way up to the top of the gap, and it could go back up there. But for me, in a short-term trade, I would be very interested if it got close to 40.
yeah. So anyways, with this in mind, again, I've been bullish for a long time, and I certainly don't think that the bull market's necessarily over, but I think, I think at some point, before too long, I think at some point we're going to get a pullback that's not going to hold on the S&P, and we're going to fall below that 200-day, and it could last for a little while.
Yeah, I was talking earlier about the S&P 500, and I'm not in the camp for shorting. I mean, I can certainly, respect anybody who wants to short. I mean, this market's been very frustrating for sure, and it's been moving in both directions. We even had some comments. I think I got either an email or maybe it was a survey response saying, I should be talking more about shorts, that, there's two sides of the market. It's going both directions, and all of that's true. But for me, my long-term look at this market is still that we're in a bull market. I don't believe we're going to lose 25.81. Now, if we do, then it's a completely different situation. But as long as that holds, I think we're in a bull market, and I don't want to short. But I can respect those who do.
Yeah. So anyways, what I've decided to do is I'm going to, I haven't had one of these webinars where I'm actually going to talk about the concept of shorting.
Okay.
And actually going to have some candidates that are on our chart list. Up until now, all of the candidates that have been on our chart list have been long bias.
Mm-hmm.
So I think we've got close to 30 or so. We still got 4 or 5 to 1 ratio of longs to shorts.
Mm-hmm.
But there's this list that could grow a little bit more, and I think we should at least pay attention to it. So we're going to throw as a matter of fact, as we're speaking right now, it'll be up there. Okay, hold on. I think it might even be up there right now. is that we actually have a link that should be on our site. It's a free webinar, by the way. So if you just go to earningsbeats.com where it says about us, you'll see at the top there's a link that says today's webinar.
All right, I'm looking. Oh, today's webinar. Okay, right there.
Yeah, and you can just go in there. It's free.
Okay.
And I think it's going to be a lesson. You know, a lot of people don't short.
Mm-hmm.
And I'm not crazy about shorting, Tom.
I do not like it.
I don't like it, but I think there's an opportunity, you know, in this volatile environment to have an option, an alternative, in case the market, you know, starts to fall back. So anybody who wants to join me today, you know, it'll probably be, you know, 45 minutes or so, something a little bit different. And maybe some people really aren't familiar with shorting. I'll be talking about that as well.
Okay, awesome. Well, certainly good to hear from you again, and good luck with your webinar later today. And we look forward to hearing from you later this month.
And go Caps.
And go Caps.
Absolutely. All right, man. Thanks.
All right. Talk to you later, John.
Bye-bye.
See ya. Yeah, there he goes again. And actually, that's a really good idea. There was somebody who recently had asked for a session on shorting. Obviously, John is going to do one later today, but maybe I'll do that tomorrow. That sounds like something that might work. Let me think about that one a little bit longer.
That sounds like fun.
Yeah, it sounds like fun. It's certainly something different, something you don't hear from me very often, that's for sure. Not in the last 9 years. But why don't we go ahead? There's the slide for the earnings spotlight, some of the stocks that John we just talked about. I did have up a chart, and I'm going to just pull this up for a second, because I meant to do this in technical news, and maybe while you're gathering everything for the 10 and 10, Aaron, I just want to show this chart real quick.
Oh, go for it.
I think it may have been on my screen here just a second ago, but this was a chart of Walmart. And I mentioned at the opening of the show that Walmart was the weakest stock in the Dow. And so this is a couple of different ways that you can look at it. There was also a comment in the survey response from Friday asking about maybe doing a session on Fibonacci retracements. I could do one, but it seems like it would be a little redundant after you do a couple of stocks. But this is basically the concept of the Fibonacci. Here's you look for a trend. In this case, I think this was a pretty substantial trend on Walmart. This is a weekly chart. So this goes back about a year from the beginning of 2017, the beginning of 2018. And then Fibonacci, in all of his wisdom, found that there were certain percentage retracements that stocks would tend to find some support at. And when I pulled Walmart up and I looked at the Fibonacci, the final Fibonacci support zone or retracement zone is at 61.8%, which would put Walmart down at $81. And you could see we had a pretty significant breakout at 80. And then I think also there was one other thing coming in. Oh, here it is. Yeah, the trend line coming across. This is a problem I have when I start putting too many things on a chart. I can't even find what I'm looking for. But here's a trend line connecting the lows over the past few years. And you can see that comes in at 77. So we got trend line support 77, price support at 80, and then you draw the Fibonacci line, and you see that comes in at about 81 and a quarter or so. So as Walmart struggles, and it's been a struggle so far in 2018, it does appear to be getting to a pretty important area of support. So just wanted to mention that. But anyway, let's move on to the 10 and 10. What do you have?
All righty. Let me get that over here for you. We have about 33 today.
Okay.
34. Actually, I'll add one more in there. You guys bringing them in at the last minute here, but I have.
What's the first one today? So I can go ahead and.
Oh, sure. Adobe.
Adobe. Okay.
ADBE.
All right.
And so, yeah, I'm going to just take a peek at the RRG here real quickly. So we can see short term where these stocks are moving and heading. All right, so we want to fit it, and a couple interesting outliers. We may look at those. We'll have to see, but I'd like to look at the color scheme here. And generally, you guys usually will pick most of them in the leading category, which is great because you probably want to know whether you want to hold on to it or not. And we're getting a lot today in the improving category. And actually, this is the lagging category. So we'll have to take a look at some of those. But let's go ahead and we will start with Adobe Systems.
Okay. Just annotated that one very quickly for everybody. So I think this is a very bullish pattern that we're consolidating in. Again, you're talking about a market that has been going down and putting in these lower, we've had a descending triangle really where the lows have been equal coming across on the S&P. That's not shown here on this chart. So I'm kind of just, moving my lines back and forth here. But, we keep moving lower and lower and keep threatening a breakdown. Well, this is the opposite. This is an ascending triangle where Adobe has moved up and now it keeps banging its head up against the ceiling at just above 230 and the rising lows. So we've got equal highs and rising lows, and that is a very bullish pattern after an uptrend. So I think Adobe looks great here. Now, I wouldn't buy it right at the resistance because we don't know it's going through just yet. So I would be looking at pulling back and maybe adding either on the 20-day test and then adding again on trendline support around 220 with an eventual target from 232 down to what, 207. That's 25 points. You get a breakout. I'm going to say around 255 would be my target here. And I would probably have a stop in at this low here around 215. So I think Adobe looks good. I'd either get it on the breakout, and that would be half a position. If it pulled back to the rising 20-day, it'd be my second position to fill it out. Stop at 215. And again, that target maybe around 255. I think Adobe looks good.
All right. It actually did come up on a scan for me today. I don't remember which one, guys, I would tell you, but it did come up.
It was your Monday setups. Yep.
Yeah, it was. Let's see. Okay, so the most popular request in the chat room, interestingly enough, is the ETF XLF. They want to know if this is something that you want to go with or cut some losses, I guess is what they were saying. Or it says that it's just limping along. What do you have to say?
Actually, I'm going to go ahead and get out of this, and I want to make it a little bit bigger chart. Let's go longer term. Let's go out a year. I really like the financials because I do think Treasury yields are going higher. That generally coincides with a rising financial environment. Financials usually do very well in that environment. But the thing I like the most, and we talked about this last week when the banks were struggling, is that we're at a very key area of support. Here you can see even with the strength we saw on Friday and with today, we're still close to a major support level on the XLF, which is about 2670, 2665. And I think as long as this holds, I would probably be okay as long as we don't close below 26.5. And those who really, want to give a little bit more room could even go back down to this double bottom here around 2570. So if you want to give some room, but I think it's going to make another run. Again, I'm looking at this from a bullish perspective. You might say I have rose-colored glasses on, those who are in the short camp. But again, a lot of the under the surface signals are telling me this market is not done to the upside. So as long as price support is holding on the S&P 500 at 2581 and on areas of the market like the XLF where we've got key support, price support, that's already been tested multiple times and held, had a nice hammer last Thursday, followed by a bullish engulfing on Friday, and now we're moving up. I'm still a fan of the XLF. Again, I think as you start to break down these key levels, then I think the nature of the chart, the characteristic of the chart begins to change a little bit. So far, I'd be bullish.
All righty. The next one we're going to do is here, HEAR. Company name is Turtle Beach Corp. Looks like a pretty large parabolic, so I know I wouldn't touch it at this point.
Yeah, this thing would be ready to come down as soon as I put my order in to buy.
Exactly.
I mean, it's clearly there's a lot of accumulation taking place. I mean, look at the volume coming in. But as Aaron said, this thing's been straight up. Look at the RSI. It's at 84. Part of trading, I mean, it's great to get in and maybe this thing will keep going higher, but a big part of trading is managing your risk. And I don't know how you can manage risk by getting into this stock. I don't know how you set your stops. I mean, I guess, it's been putting in higher lows for the last 10, 14, 16. Actually, I'm trying to look to see the last time that it put in a lower low from the prior day. And I am not seeing it since back. I mean, it looks like it's been up about 20 days in a row. Yeah, that's just too much for me because when it does start to sell, everybody that's been buying on the way up is going to start to panic. So as fast as this thing moves up, it's probably going to move down just as fast, if not faster. So that's the problem when you get in and all of a sudden one day you're down 6%, the next day you're down 3%, and the next day you're down 12%. It really starts to add up. I think if I was doing anything on this, it would maybe be to take a look at, say, the rising 20-day, and maybe you'll get a reversal the first time it comes down in tests here. You can see we got close here. We did get, I don't know if this might have been earnings related or some kind of an announcement, but we haven't even been close to the 20-day moving average throughout these last 4 weeks anyway. So I think maybe the 20-day test would be the first time that I would consider a long position. And just keep in mind the volatility on this one. It's not your everyday McDonald's or something like that. This is a stock that can move violently in both directions.
Yep. I think that's a great learning moment right there. We'll see what happens with it. But yeah, I don't like parabolics. Well, I love them if I've gotten in at the bottom.
Get out the top. Yeah, it's perfect.
It's excellent. Okay. Our next one, I think this one looks, as we always say, interesting. YY Incorporated. Why?
Why? Okay, well, the question is why would you want to buy? Well, I can tell you one reason, and that would be the positive divergence that just developed, and we're now moving through the 20-day moving average. I know that you've got a lot to go over with your DP, so I'm going to try and really pick up the pace here. But there you can see the lower move to the downside, and check out the PPO, which is rising at that same time. So at that point, I'd be looking for not only a 20-day test, but ultimately a 50-day test. And I think that's where we're headed. The overhead, I think there's two key resistance levels. You can see after big sell-off late March, we've struggled to get through 105. And the prior low before that breakdown was closer to 110. So I think as it gets up into this 105, 110 area, you're going to find some overhead resistance. But short term, I would look maybe for a little bit more strength. I'd like to see more volume coming in. If the volume stays light like this, I wouldn't be surprised by another quick reversal at some point to the downside.
All right. Let's see, the next one, we were talking about energy. Tell me what you think of Chesapeake Energy, CHK.
Yeah, Chesapeake it's really not been one of the better ones. I mean, you can see it's just constant downtrend. I'll do the relative chart. You can see that this is just a stock that here's the its peers. Look what its peers are doing, breaking out the new highs, and look what Chesapeake's doing. So yeah, it's up today. It looks really nice, up 4% today. But this has just been a disappointment 1 week, 1 month after another, and it's been an awful performer relative to its peers and the S&P. And yet you have a group that is outperforming the S&P. So what you really have is a solid group and a dog within the group. I'm not a big fan, and I think if I were to annotate this, I would just simply draw that line using the relative chart. And this right here tells me I've got a really weak stock. If I'm going to go into this area of the market, why do I want to pick Chesapeake? It can't even outperform its peers. It's just been horrible. So I'm going to pass.
Okay. The next one I have for you is Coty, C-O-T-Y.
All right, Coty, another one that's really been struggling. I don't like the fact it lost 16.5 on increasing volume, but let's just pull that support level up. There was the one area of support. There was the tail from back in February. And you can see we went down, held in that area, pulled, went back up. Look at that failure right at the 20-day moving average. And then we go back down on increasing volume. Not for me. I'm going to pass.
Okay, that was pretty easy. Let's see. This one actually came up. I didn't keep it in my Monday setups, but it is Cree, C-R-E-E. It just wasn't tempting enough for me.
Yes, let's see. It did bounce off of 36.5 support. So that was the kind of the level I was watching right there off of this big move. That prior low was down 30, just under 37. We did go down there, test it, move to the upside. I just think we're in a trading range. It does seem to be a little bit of a bias to the upside, but I think it's in a trading range from about 36.75 to 43.5, sitting at 41. At this point, I just don't see a trade for me.
Okay. Let's see, the next one we're going to do is First Cash, FCFS.
Nice chart, really good volume coming in on this last push to the upside. So I'm good with it. I'd actually like to see a little pullback now. if it pulls back and hits the 20-day moving average, it's also getting price support at the same time. So for me, I would just be highlighting that 20-day moving average and that price support level. And if it, put it on a watch list, and if it gets back there, this would be something that I would consider. But I really like the volume trends. And I just don't, again, when you get an RSI up in the 70s, I'm not interested. Let's see if we can get a little bit of a pullback. Maybe the RSI is down in the 50s, 40s would even be better. But even the 50s with a pullback at the 20-day, that would be much more interesting.
All right, let's see. A popular request actually would be Netflix, NFLX.
Yeah, this is another one I could have talked about earlier where we had a great reaction to earnings and then fell apart afterwards. But we are starting to move back up again. I think Netflix is a great company. It has been a great performer for a long time. It's had that high scooter for many months and maybe even a few years. But it's kind of got that pattern. It's not exact, but you kind of got this pattern of a equal high and rising low. So it's not perfect, but I think it's a pretty strong pattern nonetheless, where we've got higher lows coming through here, and we got higher lows, and that comes on the heels of the equal highs right there. So I think Netflix looks kind of interesting. Breakout above 340 would be very bullish with heavy volume. Here was your earnings gap up, huge move, came all the way back down. All those that got in on that move probably were panicking out on the pullback, but we have established a nice trend line now to the upside. I'm looking for a breakout on Netflix.
All right, and that is, nope, 9. You have one more, CCJ, Cameco Materials Sector.
CCJ, okay, this is a good one. I like the breakout, love the volume coming in on the breakout. So pull back to that level of resistance would be, prior resistance, now support, would also coincide with a rising 20-day test. So no doubt about it for me, down about the 1065 area is where I would be most interested in Cameco Corp. But I think the PPO looks good. Volume trends down here really look good on that breakout. So I'm bullish CCJ.
All right, and that completes the 10 and 10. And here are those symbols. I will get those up as soon as possible after the show into the Market Watchers Live chart list. You'll find that chart list with these annotated charts at the top of the Market Watchers Live blog, and you can steal them and make that relative chart your very own, or if you like Tom's chart style, you can save that as well. All right, and with that, I am going to steal the screen, and we are going to talk briefly about ChartCon. And you should be able to see right now the web address, stockcharts.com/ChartCon. And if you'll notice up here, the early bird pricing, it did end on May 5th, but they've decided to extend it just through tonight. So we're not looking at like a couple of weeks of this being early bird pricing. This is till tonight. So I highly recommend you go check out the ChartCon website address, and you can register there and still get that early bird pricing, but only until tonight. So I highly recommend you go check it out. And if you haven't registered already, today's the day. So, and next up, let's go ahead and do a quick market update, and then I will get into the DecisionPoint report. All righty. So I'm just going to look today at the candle glance. Let's make sure it's completely up to date, which I believe it is. And you'll find the link for your own candle glance right there on the homepage. So just go ahead and look in there where all the reports are in that tile. So let's look at what's going on. We're still up on the day, but you can see we hit these highs off of the open, and now we've been really moving, just consolidating straight across. And you can see the same for the S&P 500, NASDAQ. The Russell 2000 does seem to still be trending up, albeit very slowly. We have the TSX, also great move on the open, but consolidating right now sideways. Treasury yields are up somewhat. We're looking at 2.95%. And we have UUP, big gap on the open, but it's really pulled back to take about half the gains that we saw earlier. Commodities are moving higher, probably because we're seeing USO moving up higher as well, oil prices. Gold is mostly unchanged. And, you know, given that we had this move in the dollar, I'll be talking more about dollar and gold, but, you know, we're seeing gold at this point sort of pausing and moving across, even though we've got the dollar since this morning moving lower. We can see that the VIX is still reading fairly low at just below 15. And UNG in that energy space, really nice day. We've got the giant gap up, but we are seeing a bit of a pullback now on price for UNG. It is currently at 22.39. With that, I'm going to conclude the market update, and I think we'll just go ahead and get straight into the DecisionPoint report. All right. What I would recommend to you is to go to the blogs page, and you will find the weekly wrap that Carl writes on Fridays. You'll find that in the DecisionPoint blog. And there you go. He's very interesting to read, of course, but he will give you pretty much what I'm going to give you right now. He remains bearish in the intermediate to long term, I believe, in the short term as well. But let me give you my take on everything here. Oh, let's just go back this way. All right, so I want to give you a quick look. Actually, I'm going to go to our member homepage and show you where you can get to DecisionPoint timing signals. I want to go over those very first. So you can choose them right here on your homepage. So currently, as you can see, we just got in on Friday. We got a PMO buy signal on the S&P 500. We've been seeing whipsaw, started last week on a buy signal, moved to a sell, and now we're back on a buy. So we're seeing a lot of somewhat indecision on the momentum side of things. Midterm, intermediate term, we're still looking bearish. We have an intermediate term trend model neutral signal right now. The long term will not change. The long-term trend model will not change unless the 50-day EMA drops below the 200-day EMA on the S&P. And let's go ahead and I want to look at those charts for you. Let's look at the S&P. All right, so here's what I was talking about. We got that sell signal switched to a buy signal pretty much the next day. We're still not seeing the PMO readings above these previous tops, at least this one at right here. So that does concern me. We're still looking at very flat momentum, if you notice here, straight across. But we are seeing a tiny breakout. You can see the 5-day EMA is about ready to cross above the 20-day EMA. All righty. And, you know, I think this is good news. We certainly, I know I was talking last week, if we're going to bounce, we really needed to do that off of either this rising bottoms trend line or at support down here at that February low. Well, we got fortunate. It did bounce as it should. And now it looks like we might have a little bit of a breakout. And again, short-term trend model, we might see a buy signal going on for the short-term trend model. 5 looks like it's about ready to cross over the 20-day EMA. Let's look very quickly. I'm going to show you the Dow, the big fours, the big four indexes that we cover on the DecisionPoint scoreboards. On the Dow, we did get a PMO buy signal. That's going to click in today. We did not get it on Friday, but I did mark it because we should get it by the end of today. I'm looking at a descending triangle here on the Dow. I still don't like the setup as far as the chart patterns and just the feel of the market. The Dow, I think, is showing us that there's still some weakness. I would like to see a decisive breakout, and that means you'd get about a 2.5–3% move off of the breakout. So that's what I'd like to see, and that would probably convince me at that point in time that we are at least done with the correction and could see some, you know, attack here at the all-time highs. But until this pattern goes away, until I see a decisive breakout, I just can't get bullish just yet. I just can't. NASDAQ 100. I've been watching what could end up being a Head and Shoulders top. We did get the breakout though, so I think that's encouraging. If we are going to go Head and Shoulders, it would be, kind of a complex right shoulder. I feel like I'm trying to gerrymander it, make it work. So at this point, I'm not going to call out that we have a Head and Shoulders pattern right now on the NASDAQ 100, but I did want to keep you informed that, hey, it looks like we could have one forming here. We're seeing the PMO now get above the 0 line for the NASDAQ. I think that's encouraging. And again, can see if we're getting a bit of a breakout here. This is not the best declining tops trend line. I'll have to fix that. But we are getting a breakout. Actually, the breakout occurred on Friday. So the NASDAQ, again, encouraging, but we could be forming a right shoulder here. I need these decisive breakouts. I'd like to see a 3% move on these to give me confidence that that declining tops trend line's not in play anymore. OEX, similar situation. What I wanted to note here was that if you noticed on our other indexes, when we went up here in April, we did at least test that declining tops trend line. And right now, back here, we did not test it. It did not make it all the way up. We're finally starting to get above the 1170 mark here. Looks like we might close above that. That will be very nice. The PMO, you can see in the thumbnail, especially bounced off its signal line with a bull kiss. And we are seeing readings as far as the OEX, PMO readings that are moving above those late April tops. So I think that's also encouraging. But I don't like the fact we never tested this. And this is still an area of overhead resistance that we haven't seen truly price break above. You've got a 520-day EMA at this point, just about ready to click in a short-term trend model buy signal. So we could see a shakeup on those DecisionPoint scoreboards, and I will be writing about that. Already looked at the S&P. I'm going to skip our mid caps. I will look very quickly at the S&P 600. This is, again, we're now to that make or break point, I would say, on IJR, and I believe IWM looks very similar. Yes, we need to get up here and crash on through this overhead resistance area. You can see for IJR, that previous top, both of them, we need to see that breakout, getting ready for some serious overhead resistance. But we have a PMO buy signal that's starting. We actually got that. I need to change that to buy because we have a PMO buy nearing. So, it's at the top of the range. Again, we just need to see some serious breakouts. That will make me feel a lot more comfortable. All right, indicator sets. Our climactic indicators, I pointed this out in the Chart Watchers articles. And if you didn't check out Chart Watchers newsletter, it came out this last weekend. Go check that blog out. There are a lot of interesting articles there. I wrote mine on the climactic indicators with breadth. We got some climactic readings, meaning I got spikes that were higher than normal. And what I like to do is pair that with what's going on with the VIX. And the VIX, we had this penetration of the upper Bollinger Band. Now, typically in the very short term, we're talking a day or two, when you get very low readings and a puncture of the upper Bollinger Band on an inverted scale, that typically means you're going to see a decline and over the next day or two. But I got these climactic positive readings, and they came in after a short-term decline. And then we got the big pop, and that's why we saw the big rally numbers, breadth numbers. And to me, that is an initiation, a buying initiation in the short term. So my expectation when I wrote the article over the weekend was that we would see higher prices coming in to the week. And, hey, well, so far so good. But I'll be watching these to watch for those climactic readings. Once you get a climactic reading, you want to look and see what the previous trend was, and that will help you determine if you're looking at an exhaustion or an initiation. So we had these very positive numbers coming off of that decline. That would be considered a buying initiation. And I wrote about that in detail over the weekend in Chart Watchers. Now, what I want to point out with short-term and intermediate-term indicators is we're still seeing these negative divergences, and they typically portend very difficult declines. So, you know, we got these negative divergences showing up on the Swenland trading oscillators. I wrote about this previously, but we got very short-term negative divergence here. You can see the two tops on the STOB and the two tops on the STOV. We have that negative divergence, and that typically would mean a decline. So we haven't really seen that off of that very short-term negative divergence. So I am expecting that. But as we noted with the ultra short-term, those climactic indicators, I think we still have a little bit more upside potential, but I would be watching very closely in the short term. And finally, I noticed on the intermediate term indicators, and we don't generally get these negative divergences, but we've seen them previously. Again, they don't happen very often. So when they do, it's important to point it out. And as you can see with this last top on the ITBM and the ITVM, we've set up a negative divergence. Previous ones have led to some pretty sizable declines, especially right here when you look at it came in at the end of January. So I would be very cautious, and this is one of the reasons why I really want to see a decisive breakout above that declining tops trend line, because the indicators just aren't supporting a bullish move up, you know, to start testing, you know, all-time highs, or even to bust out above those February, March highs. Let's look at the big four. I have about 30 seconds or 40 seconds on each. We've pretty much covered the dollar. Tom and I agree we're still very bullish the dollar. I suspect now that we're hitting this kind of interim overhead resistance, we might see a bit of a pause here right around that 24.50 area. So I'm kind of expecting a pause to come off of UUP. I think that would probably slow that acceleration on the PMO, which is an okay thing. We're not quite to the top or extreme overbought territory. We won't really hit that until we get to about over 1.2. That's where I would, negative 1.2. That's where I would start to be looking, because that's where the threshold is on the bottom, is at about 1.2. So you should expect the upside part of the normal range to be opposite that, so plus 1.2. So we're not quite to those extremes. So I think a pause here would be likely, would be good, because it'll, you know, slow down some of that acceleration on the momentum. So I'm still looking, I think it's still bullish as far as UUP goes. You know, gold is sitting right on support. And what I pointed out in my blog, I think it was on Wednesday, is that we have a very high inverse correlation, meaning that gold and the dollar right now travel almost exclusively opposite each other. So at this point, I'm looking for a pause on UUP. I would look for a pause on gold as well. I think we might consolidate here along that support line at about 1305, 1300. But I am expecting a breakdown after that, because I think the dollar still looks fairly healthy and good. USO. Here we go, United States Oil Fund. Nice breakout today. We actually had a nice breakout on Friday. The close was above that $14. I think that was very positive. We got a bull kiss. Notice OBV volume is going in the right direction, and scooters staying high. But what I really wanted to point out was on WTIC, you can see that we're holding that support level very easily. And we did break out just above overhead resistance as well at that intraday high back here in April. I'm expecting 70 to certainly be busted. Right now, 70 is posing overhead resistance, but I still think we're going to see upside target about 76 based on this ascending triangle. Last but not least, bonds. And as I said, when I did my scan on the ETFs, about 5 or 6 bond funds came up. So as far as the PMO is concerned, it's telling us that we might be seeing a trend reversal for bonds. Here you can see we have that PMO is turning up nicely. That's why these were coming up on my buy scan for the PMO, but I'm just not, we haven't gotten over this area of resistance on this gap. You can see it even lines up with that gap we had way back in May of last year. So unless we can get a breakout above that 119.25 area, I'm staying negative as far as bonds are concerned. I think we're going to go down with TLT and test that 116 area. And with that, I'm going to complete my decision point report. And as you can see here this is pretty much what I've discussed with you. Overall, short and intermediate term, I'm not feeling good about the S&P unless you're looking at it the very, very short term. I think over the next day or two, we still could see some upside, but I don't think we'll finish nicely. Stock market condition, remember that very short-term buying initiation, but I think that's very, very short term. Bearish as far as intermediate and short-term indicators go. And with the big four, I pretty much laid it out. Bullish on the dollar, which means I'm bearish on gold. Actually kind of neutral because they're both pausing. Oil, I think, looks great. I think we're going to break out above that 70, which we pretty much have. And I'm just not feeling it with bonds yet. I'm still leaning bearish there. And that concludes the Decision Point report. And now we're almost to the very end of our show right now.
Yeah, I thought maybe what we could do before we get into next week's announcements, maybe we could pull that poll up if we've got it, just to take a look. I'd be interested to see whether folks hold positions into earnings reports. And
there we are.
Wow, it's pretty even.
Yeah, I put mine in it. I don't always, but I don't say depends because I really don't pay as close attention to that as you do. If I like my stock, and even though I'm going into earnings, I'll hold it. So I actually put yes.
Yeah, and I think if you're longer term, if your horizon is out more than 3 months, then of course you're probably going to hold into earnings because otherwise you're not going to be able to hold long term.
Exactly.
I kind of get that. I know some don't like to trade, in and out because of tax considerations and so forth. So I thought this would be interesting to see how everyone handles it. But it seems to be pretty well split between those that definitely, that do hold versus those that don't. And then there's this depends group. Now, I don't know about the 3% down there. They're asking what are earnings. I'm a little concerned about the 3%. Anyway, yeah, we got a bunch to go over. We're gonna have a bunch going the rest of the week, but let's go ahead and take a look.
Yeah, I think we had a few jokers in there, honestly. Okay, so yeah, let's go ahead and we'll look at what's going on coming up this week. And it is a packed one. Tuesday, we have on the show, what you're going to do your workshop. Have you decided it's going to be on stops?
It's going to be on shorts. I'm gonna take a look at shorting.
Okay, and we've got on Wednesday, Jeffrey Stout from Raymond James, and on Thursday, Dan Russo from ChartCon, and everything stock charts on Friday.
We got a busy week lined up. I want to thank everybody for stopping by. Please remember to complete that survey as you exit. We'd love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Hopefully see you back here tomorrow. Happy trading.